See, the word qualitative refers to the qualities. Okay, qualities. And what do you mean by characteristics? Characteristics means something which is typical of something. I can say typical of something. Now, for example, what are the characteristics of a leaf? L-E-F-E, L-E-F. What is the characteristic of a leaf, or what are the characteristics of a leaf is nothing but first and foremost thing you'll say it's green in color. Am I right? Correct? Correct or wrong?
Yes, sir.
So what is that? That is, it is typical of leaf. It is like something for which the leaf is known for. Leaf is known for its green color. That is its characteristic. Characteristic is nothing but something which is like something which is known for, which is like which indicates something, you know, which is like which is like a firm indicator of something. So leaf is a firm indicator of green color. Orange is a firm indicator of orange color. So those are the characters, and there are many other like things for which they are known. If I speak about citrus fruit, orange is a citrus fruit. So it is the characteristic of that fruit, correct? So characteristic is something but typical of something, or something for which it is known, or it is known specially for something. That's called characteristic. Okay, sun is known for what? For giving light to people. It is that is its characteristic. Okay, now. So the qualitative characteristics of financial information. So what are the most important qualitative characteristics is nothing but what what is typical about the financial information, or what what generally you will get to know from the financial information is what is the chapter all about. Okay, or the financial information is known for what qualities we will see from this chapter. So first, before going into the entire chapter, what is the topic you're going to cover under this chapter is the structure of the conceptual framework. I'll come to that. Qualitative characteristics of a financial information. That means what a financial information is all about, and how is it useful to you? How is it handy for you? Or else like what is typical about a financial information? Of course, financial information is related to finance. It is related to money. It tells us something about a company's performance, how the company has performed. Based upon that, we can decide whether we want to continue with that company as an investor, or else we need to sell the stocks of that company, or something else. Whatever we want, we can come to know about that. Okay, only from because of its characteristics. Elements of financial statements, which you may already know what are elements of financial statements. A financial statement, if I want to divide, I can divide into two major parts, that is SOPL, statement of profit or loss, then SOFP, statement of financial position. Statement of profit or loss is all about expenses and incomes, and statement of financial position is all about asset as well as liability. So these two things you already know. Okay, there is one more statement called statement of cash flows, which is all about the cash inflows and outflows, but not we are not going deeper into that. We'll restrict ourselves to only these two elements, okay, in this chapter. Let's move forward. Now, IASB's conceptual framework. As you know, what is IASB? Hamsika has attended yesterday's class. Who you have not attended, but I hope you have seen the video. So you may know what is IASB, International Accounting Standards Board. So this board has given a framework of concepts that is called conceptual framework. Okay. So to understand this very easily, you can see this particular book has 20 chapters, let's say. 20 chapters are framed in this book. Am I right? So can I say the F3 text is a framework of 20 chapters? Can I say this or not related to accounts? Please tell me. Yes, I can say. So in the same way, IASB also has given lot of concepts. Okay, and those concepts are framed in its framework. That means a book in which all the IASB's given concepts you can find, and that book can be termed as IASB's conceptual framework. See, we follow accounting standards to prepare the statements or to give treatment to any transaction. Those particular standards have been made by following principles like theories and practical experiences of different accountants, conventions, concepts, etc. So, since the concepts, conventions, theories, theses, practical knowledge, all these were very important or critical factors for preparing the accounting standards. These all have to be framed in a framework. Okay. So now let's go ahead. So IASB's conceptual framework is the basis on which IFRSs are formulated. So the accounting standards are all prepared based upon this framework, but it is not an accounting standard. Let me be very clear. IFRSs or international accounting standards. The accounting standards or reporting standards are made based upon the concepts, but concepts themselves are not standards. Let me be very frank. So it is set of principles which underpin the foundation of financial reporting. See, so that's what it is. Without concepts, you can't make standards. Without standards, you can't prepare statements or give treatments to various transactions. Henceforth, you can understand that this is the very base for the financial reporting. Now, whenever a new accounting standard is issued, it will be based on principles of conceptual framework, which I clearly explained you right now. Furthermore, its principles should be applied to account for any item where no accounting standard exists. Next point is, what is the structure of like conceptual framework? So IASB's conceptual framework is all about all these chapters which are framed in a book called Conceptual Framework. So there are 8 chapters which you'll be finding in the IASB's conceptual framework. The chapter 1 is about objective of general purpose financial reporting. Why you make the financial reports? Of course, to know the performance of the business, the profit or loss of the business. Qualitative characteristics of useful financial information, which we'll be seeing right now as we move forward. Financial statements and the reporting entity, like what is a financial statement and what is a reporting entity like. Elements of financial statements which we are going to study in this book, which I have also given you a like short explanation of that. Recognition and de-recognition, how you recognize elements of financial statements and how you de-recognize. For instance, yesterday I have given the example to you how you recognize. Suppose I give a word to you as land. So now tell me, what is this? Hamsika and Hoor, what is this land? I am putting 4 options to you, like asset, liability, income, expense. What is this? Come on, tell me fast.
It's an asset.
Why it is an asset?
It will provide us with the
Because
futures.
it gives economic benefits and it matches with the definition of an asset. Since it matches with the definition of an asset, it can be recognized as an asset in the asset side of balance sheet or in the statement of financial position. That is what is recognition about this land. Now this is the recognition, and you will be writing what value you will be writing for this land, the value at which you will buy this. Okay. And every year, see, land is some asset which won't depreciate. Everyone knows, it's a common sense. Land is something which appreciates. So every year you will also make changes to its value accordingly, and you'll be showing, or you'll be showing at cost. Okay. So there are 2 treatments. Either you have to show the latest or current value, either you have to show the land at cost. There are 2 things or 2 ways in which you can show. We will be studying in details about this particular topic, about the recognition of a tangible asset or whatever after after certain chapters. So that is what is recognition. You recognize some asset in the statement of financial position because it matches with the definition of asset and it comes in that category. How you de-recognize the asset? If you sell it. If you sell an asset, do you think you are going to show that in the books? No. Whatever the profit or loss you get from the sale, you're going to put in the income statement, and the asset gets de-recognized. Why? Because now it is not existing in your books because you sold it to someone. You transferred the ownership rights to someone. Did you understand? Please tell me. Yes
Yes, sir.
or no?
Yes, sir.
Yes. Yeah. Now the measurement. Measurement is nothing but you will be showing this land at what value. You can show that land at cost, point number one, or you can show it at its amount or value which like people in the market or market participants are ready to pay you. So I can say in the sense, if I want to sell this land, okay, I will I will show this at market value. Okay, that means that is the value which people are ready to pay me. And if I'm not selling this land, I'll show that land at revalued amount. What do you mean by revalued amount? That means you will be doing a survey in the market and you will be understanding from various people how much they are ready to pay for this land, and you will be writing that value. Okay. Then also about presentation and disclosure. Presentation is nothing but done by way of preparation of statements. And disclosure, see, some additional information about an asset you cannot write in the you cannot write on the face of a statement. For example, if this is the statement of financial position, and if I write property, plant and equipment here, let's say that is property, plant and equipment is nothing but, let's say, building, for example, and I wrote a value here, and see, I bought this building from Mr. A. So I cannot write that from whom I bought this building, and I'm depreciating this land every year at the rate of 10% by using straight line method. This is one of the methods of depreciating a plant, a asset. Okay, just give me a second. Yeah. So I was saying like about depreciation. Depreciation is nothing but decrease in the value of asset. See, you will be using an asset every year, and of course, since you are using an asset, you are trying to obtain or take maximum benefits from that asset. So definitely there will be wear and tear of that asset. Okay, that means its value will definitely go down. So you have to give that treatment as well every year. So let's say if my plant is of $100,000, 10% depreciation of that would be $10,000. So my asset value will be 90,000. This I'll be showing in the statement of financial position. Okay. And this is a expenditure would be shown in the statement of profit or loss. Now my question is the method what I'm using, the rate at which I'm depreciating, all this extra information I'll not be writing in the statement of financial position or on the face of this statement, but this additional information I'll be giving in the footnotes. What is footnotes? This I'll prepare after winding up all the required, after giving all the required treatments to all the or else if I can say simply, after preparing the financial reports, I'll be preparing the footnotes, which is nothing but an extra notes column whereby I'll be writing all the extra information related to financial report. Okay. Now, so what is this going concern? Going concern is nothing but this is the assumption on which the financial statements are prepared. In the sense, we always expect the business to be a going concern. That means it should continue forever. It should not cease to do its activities or trading or whatever. It should not get liquidated immediately. In the sense, or a business should not be a seasonal business whereby 6 months you are in trading activity and 6 months you are not doing anything. So if that is the case, then no need to prepare statements. But if the company is a going concern, that means it is going to have a perpetual existence, it is going to continue for a very long period of time, then we definitely prepare the financial statement. Did you understand?
Yes, sir.
Yeah. What is it? What is this saying? This concept assumes that when preparing a normal set of accounts, the business will continue to operate in approximately the same manner for the foreseeable future. That means it's going to continue in general. Okay, it's not going to stop its operations or not going to get liquidated immediately. So the main significance of going concern concept is that assets should not be valued at their breakup value. What is this breakup value? The value you get if you sell your assets immediately right now in the market. No, you should not show that. You should show the value of the asset by making certain by giving certain treatments to it, in the sense adjusting its value every year accordingly, like the way you are using it. For example, if you are using an asset, so definitely that asset would get depreciated, henceforth you have to give the treatment to it. Okay, so what they are saying is, what do you mean by breakup value? Breakup value is nothing but if you immediately sell your company, what you are going to get from the market, that is called breakup value. So the main significance of going concern concept is that assets should not be valued at their breakup value. So you should not, for example, your asset is of $100,000 and the depreciation you have depreciated the asset at the rate of 10% for this year. So now 90,000. So you should get 90,000. If that is given by someone, that's okay. But if you are selling your company to someone, if they give you 60,000 or 50,000, okay, they are ready to give you 60,000 or 50,000. Are you going to show your assets at 50,000? Please tell me, is that the right value? No, the right value is 90,000. Are you getting my point? Hello?
Yes, sir.
Yeah. So breakup value is nothing but if, for instance, your business is not doing well and you want to sell your business to someone, of course they'll give you a very less value for your assets. So, but but since everything is good in your business is a going concern, it is going to continue for a long period of time. There's no chance that you will be selling it to someone else, and no chance that they will be offering you this price. Hence, you are not going to show your assets at this value. You're going to show you're going to show your assets at this value. This is the right value. Okay. Now, there's an example in front of you. Please read this. So a retailer commences business on 1st January and buys inventory of 20 washing machines. That means the retailer sells washing machine to people, each costing $100. During the year, the retailer sells 17 machines at 150 each. So $100 machinery he is selling for $150 and he is making a profit of $50 and he is selling 17 machines, it seems, out of 20, and there's a closing inventory of 3 machines, correct? Closing inventory or ending inventory or closing stock, whatever you want, you can say. Now, they are asking you, how should the remaining machines be valued? So remaining machines are how many here? Come on, tell me, remaining machines are how many? 3, correct? Hello, are you following?
Sir.
Yeah.
Yes, sir.
So there are three machines left over. So how should the remaining machines be valued at 31st December if the retailer is forced to close down its business at the end of the year and the remaining machines will realize only $60 each in a forced sale? Of course, he is not going to continue the business. He is going to close his business because it's not going good, it seems. Things are not good, sorry, state of affairs for his business, it's making losses or whatever the reasons are not given, but he is going to close the business and it's a forced sale. That means he doesn't want to sell that machinery for $60, but he is forced to sell that. Why? Because people are not ready to give more than $60 to him. It costed him $100, but he is forced to sell at $60 and is closing the business. So he will be showing those. That means he will be getting only $60 per machine or $180 for 3 machines. Correct? Next, if he's going to continue the business, he's going to show the machines at what value? At $100. Am I right? The cost. Because next year he can sell these 3 machines at 150. Please tell me yes or no. Yes. Now, so he's going to show 3 machines at 3 into $100. The cost 300. Now, if the going concern assumption is not followed, that fact must be disclosed. Okay, if you are running a seasonal business, you should mention that together with the following information. See, all these are very important points. They'll ask you MCQ questions on this. So If you are not following the going concern assumption, then you should disclose some facts under the disclosure column, that is in the footnotes, together with the following information, the basis on which the financial statements have been prepared. That means if it's not going concern, then on what basis you have prepared the statements. Point number two, the reasons why the entity is not considered to be a going concern. Maybe it's a seasonal business or any other reason you can give. Now, what is this accrual basis? See, accrual basis is nothing but the effects of transactions and other events are recognized when they occur. See, I'll write a statement. The statement is expenses are recognized when they are incurred rather than paid. Point number one. Point number two, incomes are recognized when they are earned rather than received. Just make a note of this, these 2 points. We'll discuss this. If you have written, you just tell me, I'll move forward.
Done, sir.
Yeah. So what happened? What is happening here? I'll take 2 examples. See, let's say I'm running a company and there's one employee to whom I have to pay a salary. So I pay 10,000 rupees per month to him, and I need to pay him 1,20,000 for the entire year. Okay. What happened is I paid him salary. That means he that means when he is working in my company, I am incurring that expenditure, of course. Okay. And I will recognize the expenditure when I incur rather than I pay. That means, let's say the January month, he has worked in my company, so I'm incurring that expenditure, so I'll recognize that immediately. Why will I recognize? Jan 1st I appointed him. Okay, I appointed him on Jan 1st and he is working for the entire month, so I incurred the expense, I recognized it. Okay, I paid it or not, it doesn't matter. Definitely I have to pay, I will pay, that is known fact, but I have shown that expenditure in my books. That means for an employee who is going to work in my company as a permanent employee, we always keep provision for making them payments. So I have already allocated 1,20,000 rupees on his name. Okay, and that has to be paid to him. So that is clear. So like I'm not worried about like 1 month, 2 month. I already have a provision of this much to make the payments to him. Okay. Now the point is, what has happened is, 10 months the employee has successfully worked and the payment has been made to him. Now what has happened is, I have gone to Singapore for some work. Okay, and without my permission, without my signing of check or anything, the amount will not be disbursed to him. That means will not be credited to his account. But still, do you think I am incurring that expenditure if he is working in my company? Yes or no? I have not terminated that employee. He is working in my company as a permanent employee and is continuing the work. I have not given him the money in his hands. But still am I incurring expenditure or not? Please tell.
Sir, until you paid him, you won't be incurring anything, no?
No. That is what you don't know the concepts and basics. This is accrual concept, not cash basis. In cash basis, if you pay, then only it is recognized. But in accrual basis, if you incur the expenditure, you have to recognize. I'll tell you how. So what I'll do is at the end of the year, now it is December 31st. I will show entire salary of 1,20,000. How and why? For 10 months, I will show 10 into 10,000. That is 1 lakh. Please tell me, do you agree with this point? Come on. Hello. See, he has worked for 10 months, so I have to pay him or not? And I paid him. Come on, tell me,
Yes,
do
sir.
you agree with this point? Yes. For 2 months, 2 into 10,000, he has worked in my company. He has not stopped working. I am not here. I am not in the town. I am out of the town. I am in some other country right now. And I assured him that after coming, I'll give you the cash in hand. But should I not recognize this in my statement? The employee is still there in my company. Yes. By what? How will I recognize it? Outstanding salaries 20,000. So the total expenditure for me is how much? Come on, tell me, 1,20,000. How if you are so dumb? So the point here is for 10 months he worked. I was in India. I gave him his salary and everything was okay. I already told you I have a provision of 1,20,000 to make the payments to him, which I have already allocated to my accounts department. I told them you can make these payments to him. But what has happened is due to some reason, some checks have to be signed and I did not sign. I'm not in the town. I'm in Singapore. So do you think I have terminated this employee or removed him from the job? No, he's still working. Since he's still working, is he earning or not? Yes, he's not receiving, but he's earning his money. How? Because he's working. And am I incurring the expenditure or not? Yes, I'm incurring the expenditure. I'm not paying, but I'm incurring. Did you understand the difference between earning and receiving and incurring and paying? Earning is even though you are receiving or not, but still you are earning. Okay, earning means it's an activity in the sense you are continuing the work. You are earning. That means you are receiving or not, it's a secondary matter, but you will definitely receive in the future. Okay, receiving is nothing but you are physically getting the money. Incurring the expenditure means expenditure, definitely it's an expenditure for you, and if you're not like paying it right now, you have to pay in the future. But paying is paying physically. Okay, so these are the two things you should understand. It's all, see, English language is very complicated if you don't understand the words. Okay, so did you understand this example? Please tell me or else I'll repeat once again.
Understood, sir.
Yeah, so Hamsika, you are from commerce background or what?
Yes, sir, I am from commerce background.
So you did final accounts now. In that you have taken the salaries and outstanding salaries, correct? We will add outstanding or not?
Yes, sir, we will.
And this outstanding salaries is again what? Liability to the company, will be shown in the liability side of balance sheet as outstanding salaries 20,000. I know who this is new concept for you, but did you understand what I said?
Yes, sir. I'm trying to get along.
See, I have given a very good example. Now, my employee has worked for 10 months and is going to continue the work. The only difference is till the 10th month, I paid him physically. Every time I gave him his cash. Last 2 months, I'm
Yes.
not available here. So do you think the employee is working and I won't pay? I will pay. So for that reason, I will show the expenses in my books. Because I already made a provision of 1,20,000. I'm not worried about anything here.
Yes,
I
sir.
already have allocated this amount for his payments. So my team will assure him that don't worry, your payments are with us. The only thing is the check has to be signed. So the employee is also very much confirmed and convinced that he will get the money because he is working and he is earning. But only the point is he is not receiving. He'll receive in the future. So definitely my entire expenditure is 120 na, at the end of the year. How? 1
Yes.
lakh paid and 20,000 outstanding to be paid. Okay.
Yeah.
Definitely the day when I pay him, that day my liability will be zero and my expenditure I have already recognized. Okay, so no need to worry. Now,
Yeah.
so now coming to incomes. Now I have to give you example for income even. Now I told you incomes are recognized when they are earned, rather than received. So here receiving and paying aspect is of no importance in accrual concept. What is important is incurring the expenditure and earning the revenues or incomes. Earning is not receiving, but you're earning. Okay, how? I'll show you. See. So let's say Hamsika is my tenant. Okay. So Hamsika has made the payment to me for the entire 1 year's rent. Okay, so the rent happens to be 10,000 rupees per month, and the total whole year's rent happens to be 1,20,000 rupees. And say Hamsika said me that sir, I will give you this rent in advance. Okay, and I'll pay monthly. I will pay you this immediately at a go. Okay, so she is making the payment to me and I am receiving that 1,20,000 here. Okay, so what is this actually to me, Hamsika? This is an income or what?
So it's an income.
How it's an income for me? You paid me the money on Jan 1st. As you made the payment, immediately I gave the keys to you. And now you have bought, you have all like set up all your belongings in the apartment or whatever, and now you have started residing. So how will I recognize this as an income, Hamsika? This is not an income for me. This is unearned revenue. What is that?
Unearned revenue.
Or there's a different another name for that. It is income received in advance. But why it is not an income? Definitely it's a shocking, it's like very shocking to hear this point. See, until and unless see this 1,20,000 what you gave to me is a liability for me. It's a obligation for me. Obligation or liability. How? Listen, I'll show you. Very strange, na? Now you'll understand. See, Jan 1st, you gave me 1,20,000. And this is my balance sheet. This is my balance sheet. I'm making T-shaped balance sheet, asset, liability, and I immediately took this amount and showed as unearned revenue. That means it's a liability for me. Why it's a liability for me? Now this question is to be answered. See, till Jan 30, okay, till the month has passed. Do you think I have earned the rent? No. Why? Because the month has not passed yet. Jan 30 is the last day of January. Jan 31st is the last day of Jan month. Correct or wrong? Please tell me.
Yes,
Yes, sir.
sir.
So since Jan 31st is the last day of January month, till this day has not come, how is it possible to say that I have earned that 10,000 rupees rent? Because to definitely to earn that rental income, I have to give you that service. Am I right? and the service is promised to be given for the entire month, isn't it so? Likewise, the entire year as well. So when the Jan 31st day has come, 1 month has passed, and for me, my revenue or income is how much now? 10,000 rupees, correct? Please tell
Yes,
me
sir.
yes or no. Yes. And my obligation has decreased by how much? 10,000. Now my obligation is how much? 1,10,000.
1,10,000.
Why? Because now February month will start and my obligation towards you is to provide you the rental service. So now February 1 will come, and now again Feb 28th will pass, and then the second. Now see, one point I want to tell you, I received the money from you, but I did not earn it completely. My earnings only would be decided if the entire month is passed, and likewise the entire year is passed. Understood or not?
Yes, sir.
Yes. So I received the money, but I did not earn. So what did I say? You have to recognize the incomes only if you earn rather than receive. Your earning is important, receiving is not important. Because if Hamsika wants to leave this house after 6 months, I have to give her back her 6 months rent. So that's a liability for me, correct? So in the same way, from Jan 1st, Feb, so like this, what will happen? Income received in advance, and every month she'll be paying, and at the end of the year, it is December 31st. My liability is zero towards Hamsika, and my earnings are 1,20,000. That is rent received. Okay, this is the concept. And in between, if she leaves, what will I do after 6 months? So I'll take this 1,20,000 as rent, rent received in advance. Rent received in advance 1,20,000 less rent received 60. That is after 6 months you want to leave. Okay, rent received 60 and 60. See, sorry, rent received in advance is 120. Out of that, rent received is 60. So this is rent received, and this is rent to be paid to you. Am I right? Correct or wrong?
Yes, sir.
Rent to be paid is 60,000 to you. Okay. So this is my income received in advance less the amount I have to return you back, and the rent what I have received complete 60,000. Okay, and my obligation was of how much? 1,20,000. Out of that, 60 is the rent I received. Okay, and 60 I have to return you back. So my liability is of now no liability at all. 60 I will return you back. Okay, and the rent I received is 60,000. Did you understand this concept?
Yes,
Any
sir.
doubts in this?
Sir?
Who did you understand? Yes.
Sir, so in the accrual concept, only when we incur it, we recognize it, but even the earnings would be on the liability side because we haven't
Yeah.
yet received it.
Yes.
Okay.
See, this is just one of the examples. Okay, so I have explained you the salary concept whereby outstanding salary was there, but there will be prepaid also prepaid income, prepaid expenses, and income received in advance. I explained you right now. Okay, outstanding income will also be there. That means you will be supposed to receive from someone. Like in case of that employee, for me it was an outstanding expense, correct? But for employee, it was what? Outstanding income. Please tell me yes or no.
Yes, sir.
Yes, Hoor? Did you understand? Hello?
Yes, sir.
For me, it was outstanding expense of 20,000, na? And for him, it was outstanding income of 20,000. So, like outstanding income in the sense when I'll pay him, my entire expense will be 1,20,000 and his entire income will be 1,20,000. That's it in his books. That means if he's maintaining books. Okay. Now, So now so you understand everything correct about the accrual basis, and you should know there is a matching concept also. That means for every dollar of revenue earned, definitely for that some cents of expenditure have been incurred. That means without spending you can't earn in your business. So incomes, whatever you are earning, have to be matched with the expenses. Okay, now, so please go for this question. I'll just see what you're understanding. Please go through that thoroughly. So Emma purchases 20 t-shirts in her first month of trading, May, at a cost of $5 each. So what has Emma done? She has purchased 20 t-shirts in her first month of trading, that is May, at the rate of $5. So $100 purchase she made. She then sells all of them for $10 each. That means she is selling them for $200. Emma made a profit of how much? 200 is the selling price of 20 t-shirts, and 100 is the cost price of 20 t-shirts. So 100 is the profit. Am I right? For 20 t-shirts. Emma has therefore made a profit of this. And how did you get this profit? You matched. What did you match? Your cost with your revenue. Am I right? Cost of what? 20 t-shirts. You matched with revenue from 20 t-shirts. You got the profit for 20 t-shirts. Please tell me. Yes. Yes. What am I asking? Did you understand this? I'm not getting any answers. Hello.
Yes,
Hello.
sir. Yes, sir.
Okay. Now, all of Emma's sales and purchases are on credit. Credit means she has not paid cash. That means no cash has been paid or received. Now, if, however, Emma only sells 18 t-shirts, it is incorrect to charge her statement of profit or loss with cost of 20 t-shirts, as she still has 2 t-shirts in the inventory, correct? Yes. So if Emma is selling, let's say Emma has how many t-shirts? She has 20 t-shirts. So she is selling only 18 t-shirts. Okay. So we will take the selling price of 18 t-shirts. Is that each one she is selling for how much? $10. And she still has 2 t-shirts in the inventory. Okay. Now we'll try to find out the profit. So 18 t-shirts she is selling at the rate of 100. 10, sorry, it is like 180, and the cost is 10. Okay, the cost is 5. Yeah, so this is like revenue, and now she bought how many t-shirts? 20 t-shirts, correct? At the rate of what? 5. Please tell me.
Five.
Yeah, that is 100. But out of that, like she is going to deduct 2 t-shirts because she did not sell those 2 t-shirts. It is with her. 2 into 5, 10. So how much it is? 90. Okay. So right now 18 t-shirts is like what is the selling price of 18 t-shirts? 180. Please tell me yes or no. Yes.
Yes.
18 t-shirts.
Yes.
18 t-shirts selling price is 180, and 18 t-shirts 20 minus 2 is what? 18. 18 t-shirts cost is 90. So from selling price, if I remove 90, the cost price, I get 90, the profit. Correct? Yes.
Yes.
Yeah. So please go for this entire, once again, please see this. I am going for the statement.
Sir, could you show the last part once?
Sorry.
Sir, could you show the last part once?
What I wrote, what I explained, that one.
Yes, sir. This one only.
Okay, this one. Yeah. I don't think we can finish this chapter today, but tomorrow we can put a full stop to this. Tomorrow I'll wind up this one.
Done, sir.
Yeah. So let me finish this statement, what they are showing. I think the statement is about like, see what they are showing. Oh, excuse me. So you can see the inventory, the leftover inventory is how much? Two like this thing, correct? What is that about? T-shirts. So what? Yeah, two T-shirts are left over. You agree with this? Yes, two T-shirts are left over, and it costs. So this is assets. This is liability. A balance sheet comprises of asset and liability. So there are two T-shirts, which is an asset. Why? Because in future we may sell it and we may get profits. So it's a asset. So two T-shirts at the rate of $10. And please tell me, Emma has sold the T-shirts on credit or on cash basis? She has sold the T-shirts, 18 T-shirts on credit basis. Correct or wrong? Yes. What? All of the sales and purchase are on credit. It is very clear. So let me tell you something. Whether it is
Yes.
a cash sale or credit sale, the difference would be, if it is 18 T-shirts are sold on cash basis, then you will be showing the revenue for 18 T-shirts at the rate of $10, 180 in your income statement. Okay, and nothing you will be showing in the balance sheet. No treatment. But why? No, balance sheet you will be showing a treatment of cash. How much cash you received? 180. Come on, tell me. Yes or no?
Yes, sir.
Yes, sir.
But if it is a credit sale, then if it's a credit sale, then still you will be showing revenue for 18 T-shirts at the rate of $10, 180. But in balance sheet, you will not be showing anything in the cash account, but there will be an account called receivable account, which is also an asset for you. For in receivable account, you'll be writing 180. Do you agree with this point? Yes. Okay. So one thing I would like to tell you, whether cash sales or credit sales, it does not matter in income statement, because in the statement of profit or loss, you have to write either of the sales. That means either it's a cash sale or it's a credit sale. You have to show that in the statement of profit or loss. But in balance sheet for cash sales, you'll be receiving cash 180. Okay. Okay. But in the case of credit sale, you'll not be receiving any cash. That means in cash account it's zero, but in receivables you'll be showing 180. Why? Because that 180 you are supposed to receive from your customers. That's what is the difference. They written here. Receivable 180 and 10 inventory. Okay, 190. But See, like proprietors capital, like how much is the profit they made from this? Did we calculate the profit? We calculated 90, na? Please tell me yes or no.
Yes, sir.
Yes. That 90 is always added to capital account. Okay. So they are taking that as 90 here, and accounts payable. See, as the question was very clear, there is no cash purchases or cash sales. So, so what has happened is Emma has purchased how many t-shirts? 20 t-shirts, but she sold how many t-shirts? 18 t-shirts, correct? And how many t-shirts are left over? 2 t-shirts. So this is closing inventory, which we have already shown in the balance sheet asset side. 18 t-shirts, money we are supposed to receive from customers. We showed them as receivables in the asset side. What about these 20 t-shirts we bought? We bought these 20 t-shirts on credit basis, for which we did not make any payments till now. So are they our payables or not? Please tell me. Yes? Come on. They are our payables.
Yes, sir.
Yeah. So I showed 20 t-shirts in my income statement as well. So now I will tell you whether it is last and final point, whether it is cash sale or credit sale. Okay. For cash sales, what is the entry in both the cases, or whether it is cash purchase or credit purchase, in both the cases you will write these two in the statement of profit or loss or income statement. How will you write? You'll write like revenue, either it's a cash sale or it's a credit sale, it doesn't matter. In both the cases you'll write revenue, and whether it's a cash purchase or credit purchase you'll write purchases. Okay, but in the balance sheet, if it's a cash purchase, cash, you will be writing amount in the cash account. Okay, if it's a credit purchase, what about the credit purchase? In case of credit purchase, no amount, I'll write a arrow mark here, no amount in cash account. In case of credit sales, sorry, in case of credit sales, no amount in cash account, but it will be showing what? Receivables account. Please tell me yes or no. Hello.
Yes, sir.
Yes. In case of cash purchase, okay, in case of cash purchase, I'll write it here. In case of cash purchase, cash account, you will not write amounts, but you will deduct the amount from this. Why you will deduct? Because you are purchasing goods and the cash is going out, correct or wrong?
Correct.
Yes. Yeah. In cash sales, money is coming, so cash account will increase. In cash purchase, money is going, cash account will decrease. Okay. In case of credit sales, receivables have come. In case of credit purchases, payables will come. That means you need to pay. Understood?
Yes, sir.
That's what. Okay. So this is the explanation completely about this. So here, that's the reason why payables for 20 t-shirts, you need to make the payment. Okay. It doesn't matter how much you sold or you did not sold. You bought 20 t-shirts. I agree. You sold 18 t-shirts. Okay. But the 20 t-shirts what you bought is on credit basis. So you will show that as payables. 18 t-shirts you sold to public. So whether it's a cash sale, if it's a cash sale, you'll receive the entire amount in the cash account. If it's a credit sale, you will be writing as receivables. But 2 t-shirts which are left over is nothing but closing inventory, correct? So that closing inventory is here.
Yes, sir.
So today's class we would end here. Please go through these concepts very properly. It seems to be
Yes.
very new for you. And any doubts, please collect and bring to my notice tomorrow. I will wind up this chapter tomorrow. I have spent very good amount of time today on explaining you things. So please work hard. Okay. Thank you.
Yes, sir. Thank you.
Thank you.
Sir, I had a doubt.
Can you call me?
Yeah, okay, sir.
Please, yeah, yeah.